It was a quiet Thanksgiving night when something happened that almost no one in crypto noticed. While most of us, myself included, were in a turkey-induced food coma and traditional markets were closed, a single trade went through on the Hedera network that could change how we invest forever. Yes, you heard that right. An exchange-traded fund trade on Hedera's blockchain. If that does not make you perk up as an HBAR holder, I do not know what will. Now, I am not here to hype random headlines. I am here to sound a friendly warning about what is coming and to share how I am getting ready for some serious market shifts. Consider this your invitation down the rabbit hole with me. A journey that starts with an on-chain exchange traded fund, winds through the pitfalls of centralized markets, and ends with me turning old smartphones into a mini telecom network. Seriously, buckle up, because every line of this story is either going to inform you or at least make you smile. Let us kick off with the news that has me buzzing and why it might be a turning point for all of us in crypto. The canary in the crypto coal mine. Imagine waking up to find out that after the New York Stock Exchange rang its closing bell and everyone went home, a fully regulated exchange-traded fund linked to Hedera's HBAR token was trading on a public ledger. That is exactly what went down. Archax, a regulated digital asset exchange from the United Kingdom, tokenized the Canary HBAR exchange-traded fund and executed the first on-chain transaction of an exchange-traded fund on the Hedera network. In plain English, they traded a fully regulated exchange-traded fund on a crypto network outside of stock market hours. Why is this such a big deal? Let us break it down. The Canary HBAR exchange-traded fund is essentially a spot HBAR exchange-traded fund, a fund holding real HBAR tokens as its asset. The ticker is HBR, which is not a coincidence. It is basically HBAR without the letter A. It was launched by Canary Capital as the first United States spot Hedera Hashgraph exchange-traded fund. As of early November 2025, it was managing something like $70 million worth of HBAR, so we are not talking about a tiny experiment. This is a serious fund. And on the 27th of November 2025, Thanksgiving Day, Archax facilitated a live trade of this exchange-traded fund on Hedera's blockchain, while United States markets were closed for the holiday. Think about that for a second. A regulated exchange-traded fund trading on-chain at a time when the New York Stock Exchange was shut. Archax even tweeted proudly about it, essentially saying that they had bridged traditional finance and crypto while everyone else was eating pie. This was a historic first. Never before had an exchange-traded fund trade been executed on a public distributed ledger network in real time. It is like the financial world's equivalent of a moon landing, done in stealth mode. The completed out-of-hours transaction was a landmark achievement, showcasing the potential for digital assets such as tokenized equities to transact beyond traditional market hours. In other words, they proved that you and I could trade something like an exchange-traded fund at 8 p.m. on a Thursday, on a holiday, with full regulatory blessings. If that does not make you pause and think, read it again. Archax's leadership even said that tokenizing the Canary HBAR exchange-traded fund on Hedera represented a major step forward in bridging traditional and digital markets, showcasing how regulated financial products can exist and move on-chain while maintaining the compliance and oversight expected by institutions. Translation. We can have our crypto cake and enjoy it with regulation too. No rule breaking, no corners cut. They maintained all the normal compliance checks, but still did it entirely on Hedera's ledger. And Hedera was not chosen by accident. Hedera has enterprise-grade governance, high speed, and low fees that make it ideal for this kind of thing. Hedera's reliability and compliance-friendly design provided the perfect rails for a 24/7 trading scenario. Fast transactions, tiny fees, and a governing council of reputable organizations. That is Hedera. No wonder it was the network that got to flex this muscle. So, what does this mean for us as investors? Why am I calling it the canary in the coal mine? Because it is a warning of bigger changes ahead. It signals that the old limitations of the market are starting to crack. We are seeing the first glimpse of a world where stocks and exchange-traded funds might trade 24/7 just like Bitcoin does. A world where being off the clock is no longer a thing in finance. And if you are not ready for that, it could catch you off guard in a big way, breaking free from the 9 to 5 market. For as long as modern markets have existed, we have been tied to the clock. Stocks only trade Monday through Friday, 9:30 to 4. If news breaks at 4:01 p.m., tough luck. You are waiting until tomorrow. If something major happens over the weekend, you either hope or worry until markets reopen. Traditional securities markets have strict hours and they shut down on evenings, weekends, and holidays, which is wildly inefficient for global investors. How many times have we seen a stock gap up or down on a Monday because something happened on Saturday? By the time you get to trade, the big move is already over. Or think about crypto. Bitcoin can crash 20% on a Saturday, but if you hold a Bitcoin exchange-traded fund on a traditional exchange, you are stuck watching until Monday. That was the old reality. Tokenization is shattering those constraints. Archax showed that a regulated asset can trade on-chain continuously, even when the old markets are asleep. The ability to do this opens up so many possibilities. It levels the playing field across time zones. Not everyone lives on New York time. Global investors often wake up to closed markets or have to trade in the middle of the night. With on-chain trading of real-world assets, the sun never sets on the market. Whether you are in Dubai, New York, or anywhere else, you can trade when you need to. This continuous trading could also reduce those notorious market gaps. If news comes out at 8 p.m., instead of everyone stewing overnight and then a flood of orders at open causing a big jump or drop, people can react gradually as the news unfolds. The price adjusts more smoothly in real time. Better price discovery, more liquidity, and fewer unpleasant surprises when markets reopen. These are the potential benefits. From where I stand, this first on-chain exchange-traded fund trade is a turning point. It is the proof of concept that many of us in crypto have been waiting for. Proof that traditional finance can actually integrate with blockchain in a live, meaningful way. The trade was small, but it is a signal. It tells me that sooner or later, more assets are going to follow onto the blockchain. Today, it is an HBAR exchange-traded fund on Hedera. Tomorrow, it could be a basket of tech stocks, or a commodity exchange-traded fund, or even big-name equities themselves. And if that sounds far-fetched, consider who Archax works with. They are regulated in the United Kingdom and the European Union, and they partner with major institutions. This is not some fringe project. It is part of a much broader push to modernize finance. Earlier in the year, they helped tokenize United Kingdom government bonds and money market funds. So, this exchange-traded fund trade was not a publicity stunt. It fits a pattern. The writing on the wall is clear. Finance is evolving. We are heading toward a model where markets operate 24/7, with assets tokenized on public ledgers, with regulators watching, but without the bottlenecks of the old systems. That is why this exchange-traded fund trade is the canary in the coal mine. Big change is coming. And as an HBAR holder, I felt validated by this. Hedera has sometimes been overlooked in wider crypto discussions, but here it was powering a real-world milestone. Hedera's strengths made it the go-to choice for an institutional-grade experiment. That suggests Hedera could play a major role as more traditional assets move on-chain. But with opportunity comes responsibility. If markets are moving toward continuous trading and deeper integration with blockchain, we need to adapt. This is the warning I mentioned earlier. Do not get caught flat-footed. The next market shift may be very different from what we are used to, and I want to be prepared. I want you to be prepared too. Before I get into how I am preparing, here is the important disclaimer. This might shock you, but I am not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Alright, let us get into my game plan. Plan A, Plan B, and Plan C. Never rely on one gatekeeper. If there is one lesson crypto teaches over and over, it is never rely on a single point of failure. And very often that point of failure is an exchange. We have all seen exchanges go down, withdrawals freeze, websites crash, or platforms struggle during volatile moments. Some cases were far worse. The collapse of FTX still lingers in everyone's memory. Even outside of disasters, how many times have major exchanges suddenly shown errors during fast price movements? Too many. So, here is what I am doing. I am signing up, completing KYC, and testing as many exchanges as I reasonably can. I want Plan A, Plan B, and Plan C ready at all times. Plan A is my preferred exchange. Plan B is another exchange where I have already verified my account and know the interface. If Plan A ever says it is down for maintenance at a critical time, I log into Plan B. Plan C might be a third exchange or even a decentralized option. The key is never to be locked out when action is needed. Let me share an example. Earlier this year, a certain altcoin was surging. My main exchange paused withdrawals for that specific asset. Liquidity issues, they said. I wanted to move it, but could not. Luckily, I had Plan B. I bought the same coin on my second exchange, moved it out, and managed my position there. Without Plan B, I would have been powerless watching the roller coaster. Not fun at all. And here is the most important part. Do your KYC before you need it. When the market moves fast, exchanges get flooded with new signups. Verification can take days or weeks during those moments. By the time your account is approved, the opportunity could be gone. This extends beyond exchanges. It also applies to on-ramps, off-ramps, brokers, and more. The more options I have, the safer I feel. Since I must give a transparent disclosure, I do have affiliate links on my website for several exchanges. Using those links supports the channel. They do not cost you anything extra, but can help me keep producing this content. Again, they are on my website and clearly marked as affiliate links that support the channel. The main message is simple. Have multiple options. Exchanges can and do go down without warning. And if markets begin operating around the clock, it will be even more important to have different routes to access your assets. Now let me share another piece of my preparation that is a bit more unusual. Testing a new frontier. Unity nodes. I want to share something else I am doing to prepare for the future. Unity nodes is part of that. This is a project created by World Mobile and Minutes Network. And it caught my attention because it allows everyday people to contribute to telecom infrastructure through software licenses that turn smartphones into network testing devices. Think of Unity nodes as a decentralized system for verifying telecom networks. Instead of relying on a handful of centralized monitoring tools, Unity nodes allows thousands of phones to perform automated tests such as making sample calls, measuring signal paths, and checking for quality issues. The phones send this data back to the network, which helps carriers find issues or fraud and improve efficiency. When I first heard about it, the tech enthusiast in me was curious and the investor in me saw potential. So, I decided to participate. I bought a Unity Node software license pack that came with 200 available licenses. That means I can connect up to 200 smartphones as part of this decentralized telecom testing network. Now, I am not plugging in 200 phones right away. That would be a bit extreme. I am starting with 10 phones. These are a mix of old devices I already had and a few inexpensive second-hand Android phones. The Unity Nodes app is lightweight and easy to install. It does not require fancy hardware. Each phone is assigned one license, and once it is connected to Wi-Fi or mobile data, it begins performing small telecom tests automatically throughout the day. It is not calling random people. It runs controlled and automated tests. It is all done quietly, without disrupting use of the phone. Each license equals one device, so 10 phones means 10 licenses in use. And if everything goes smoothly, I may scale up. I have plenty of remaining licenses to expand if the project proves successful. Now, why would anyone do this? The reason is rewards. Telecom carriers pay the Unity Nodes network for auditing services. Instead of paying a centralized operator, they pay distributed node operators like us. The rewards are paid in crypto, and I get to choose which crypto I want to receive. I have selected Bitcoin, Ethereum, ADA, and XRP. These are long-term assets I am happy to accumulate passively. So, picture this. My old phones are now running small telecom tasks in the background and paying me in a mix of Bitcoin, Ether, ADA, and XRP. It is like a micro-mining operation without the noise or power consumption. Will it make life-changing money? Probably not. But it could cover the phone costs and more over time. And it gives me exposure to a different layer of decentralized infrastructure. Unity Nodes also fits into the bigger theme of decentralization. Just like the Hedera Exchange Traded Fund trade showed decentralization coming to traditional markets, Unity Nodes shows decentralization coming to telecom. It is about reducing reliance on central systems. It is about making services more global and more open. If you want to learn more about Unity Nodes, I will have a link in the description where you can find their light paper and rewards calculator. As always, do your own research before getting involved in any project. Final thoughts. Prepare for the new normal. The core message I want to leave you with is simple. Change is constant in crypto, and now that change is touching traditional markets too. The first on-chain exchange-traded fund trade on Hedera is more than just a news headline. It is a sign of what is coming. It shows us that traditional finance and blockchain are merging. The separation between them is shrinking. The way markets operate is evolving. The way networks operate is evolving. Value is moving differently than before. 24/7 markets may soon become standard. Decentralized networks may take on more responsibilities. Even our old phones might become little pieces of global infrastructure. My warning to you is this. Do not be caught unprepared. Pay attention to the shifts. Diversify your access routes. Learn new tools. Stay informed. And remember, you are not on this journey alone. We have a free educational Discord community where we talk about crypto, markets, on-chain developments, and everything else happening in the space. The link is in the description. Feel free to join. It is a friendly place, and I check in often. As we head toward a future where traditional finance and blockchain overlap more than ever, I want you to feel confident and ready. The fact that you are watching this means you are paying attention. And that already sets you apart. A quiet exchange-traded fund trade on Hedera during a holiday might seem small, but I believe it is chapter 1 of a much bigger story. I am preparing for that story. With multiple exchanges, with new infrastructure tools, with curiosity, and with caution. Because I think the next chapters will be even more dramatic. So ask yourself, are you prepared for what is coming? Thank you for spending this time with me. If you found this valuable, consider sharing it with someone who holds HBAR or anyone curious about the future of markets. Check the links in the description for more information. Stay prepared, stay informed, and I will see you in the next one.